Tunisia, India's leading energy expert, Bora Barryman, managing partner at the Hormuz Straits Partnership, and Rob Barnett, senior global energy and commodity analyst at Bloomberg Intelligence. Thanks so much, gentlemen, for joining us. No shortage of things to talk about. Bora, if I can start with you and just talk a bit about the general trajectory for oil, really, with all these sort of peripheral elements that are influencing it. Geopolitics still being held pretty limited in how it's being priced in. One or two articles there showing us that sort of Goldman Sachs, for example, looking for the summer peak to be hitting 87 for Brent. That doesn't seem to be a very strong trajectory for what is a pretty uncertain time for oil markets. What's your sort of view on where we're going?
In the big picture, we've seen an overall trend over the past several years, you could say, of the whole commodity complex coming off from highs of post-COVID highs. This is reflected in the price of obviously crude, but also battery materials like lithium. They've come down significantly over the past few years. But it was an interesting, actually, Gulf Intelligence infographic that was distributed yesterday that we need more capacity, more investment in capacity for both, actually, for the battery materials specifically, that there will be a shortage given the energy transition in the capacity for these materials to be met. And I think, I view oil in that context that, right now there may be some overcapacity, but the investment is not going into the sector. And in the long run, there will be demand from many sectors for hydrocarbon originated products. Of course, fuel is what we're familiar with, but there are the petrochemicals, there are the fertilizers, there's LNG. There needs to be investment into the sector, and OPEC is clearly clearly doing something about overcapacity. And again, stepping back on this trend that there has been a kind of a downward pressure on oil, that has underpinned, I would say, a lot of the breathing room that the Western economies have experienced and enjoyed over the past 2 years. Because if we look at the U.S., we could say core inflation is 4%, stripping out and the impact of energy. In the UK, core inflation is 5%, whereas services inflation is 6.5%. So if there's any hope for economic recovery, growth, and a reduction in rates, it has come from this relatively benign energy price outlook, at least benign from the perspective of the consumers. But in the long run, I think there's a lot of difficult decisions to be made, because I don't expect the prices to stay that low in the long run.
Okay, thanks, Bora. Yeah, so I mean, Rob, I'll go to you with that. The commentary that we're getting a lot is, oil is relatively cheap, right, compared to other consumer products, whether it's your food or your coffee or anything else, and it has been muted. Also, if we look more short term, the recent challenges, shipping challenges, which we'll talk about later, investment as a long term. You've got obviously, even the OPEC cuts coming in and trying to support the price, and yet we're still not seeing that. So, your sort of point of view. I know your colleague Mike has always got a bearish outlook. At some point, we're dropping down to $40, but it looks like we're kind of staying at least at a minimum in this floor.
Well, that's right. I think that there's certainly a geopolitical risk premium that you're still seeing in the market right now. But I would say generally our team, when we look at the fundamentals, we see a pretty soft set of demand numbers, ample supply in the near term, but that setup that I think Bora was describing, where there's potentially underinvestment in the medium term with Saudi Arabia, for example, taking some capex that they were going to do over the long term and kind of tabling that for now. So when you look out over kind of multi-year time horizon, we see the potential for a much tighter market. But here in the near term, I think the main factor that's really helping to support some of the pricing is all the headlines and geopolitical risks that we're still seeing.
Okay, thanks, Rob. Narendra, good morning again. Let's talk a bit about the geopolitical, not risk, but action. You know, and with regards to India, there's a bulletin headline also on our news bulletin today about U.S. sanctions, renewed sanctions we've seen starting to be implemented recently as well. And, you know, finally, some commentary that Russian oil shipping is going to be actually impacted by these sanctions now. And of course, one big recipient of Russian oil last year continues to be into this year's India. What's from your perspective, are there any concerns on that, as there are already indications that India is taking less Russian oil?
Well, I have seen, we've seen the reports, as you know, that Indian refiners, whether public sector or the private sector, they buy a majority, most of their oil from Russia on delivered basis, which means that Russian exporters, they take care of shipping and insurance. So as long as, oil is available, Russian oil is available to Indian refiners on delivered basis, I think India will continue to buy. That seems to be the policy of the government and also a majority of refiners, because economics work for us, and India, we have no problem in. There are no other issues in terms of buying Russian oil, because there are no Indian sanctions against Russia.
Yeah, but there will be an impact on Russian ships trying to get to India. That's my point, is that these new sanctions, people are saying, will start to impact.
Well, yes, I mean, we have seen those reports. And so as I said, that, Indian refiners, as long as Russia is able to give attractive discounts and they're able to deliver on, delivered basis, I think India will continue to buy. Now we have to see how Russian exporters, I mean, they can kind of, find a way. They can find a way to still to continue to deliver oil to Indian refiners. I think it will be business as usual. But if they can't find more ships, because India's shipping fleet is very small, 90% of our oil is imported using foreign bottoms. So which means that we don't have our own ships which can go to Russia, bring it to our refiners. So Russia, they have to provide, and they have been providing so far. So let's see how it works out, as far as Russian exporters are concerned. If they can do, I think it's going to be business as usual. If they can't find ships, they can't find a solution, we'll have to wait and see what happens.
Okay, thanks, Narendra. Bora, just back to you on that point. I mean, there are some indications, let's say Europe, in terms of supplies getting to Europe, whether it's products, crude, the general sort of possible challenge of global shipping shortages, right? I mean, you've got the practical thing of sanctions being applied on Russian tankers, but then we have the Red Sea disruptions and the more tonnage mile, and again how that kind of flows into supply of shipping and cost, obviously. Are we going to see? I mean, are you seeing any disruption, real disruption possibility to Europe getting its supplies of products or crude or any other, or anywhere else for that matter? Is there going to be a concern on that this year, as there wasn't last year, really?
Well, generally, the disruptions that Europe experiences, they impose on themselves. So it's up to Europe, I would say, in terms of, are they able to access the energy flows which they require? And what I meant by that were the sanctions on Russia, of course. I was uh, trying to quip there. However, there are also the risks of energy supplies from the US, as increasingly, there are these odd regulations preventing, in the medium term, expansion of LNG import facilities that would be targeting bringing American products to Europe. And I believe rationale for those regulations were related to environmental concerns of the Biden administration. So, the policy is we don't buy from Russia. OPEC is not investing into certainly crude infrastructure. They are investing into LNG infrastructure. We've seen Shell and Qatar make strong statements that they will invest into the LNG space. However, with an eye on the Asian market, not necessarily exports to Europe. So I think for the medium term, uh, whatever energy bottlenecks exist in Europe are primarily self-imposed, related to energy transition and net zero targets. And to the extent that they can be flexible with those um, restrictions that they place on themselves, I think Europe will get access to the energy it requires. But there'll be some political frictions and sparks along the way.
Rob, just addressing those, that I wanted to talk about gas. We talked a bit about it on the podcast yesterday, but we have had a couple of announcements from Saudi and Qatar this week, new discoveries, plans to expand gas. Why now? Why do you think, and to Asia, as Boris said, that was at the main market they'd be targeting. There seems to be plenty of gas coming online in the next few years already. Prices are at historic lows if you look at Henry Hub, etc. So again, what do you think is spurring this?
Well, I think it's probably a reflection of the long-term growth trends. Under a good scenario over the next decade to 2 decades, maybe oil demand might grow at 1% a year, something like that. I mean, it's a much slower growth outlook for the fuel. When you look at gas globally, we believe gas demand could grow 5% plus. This it's not growing as fast as wind and solar, but it's a fuel that has a pretty good trajectory in terms of that fundamental demand outlook. And so whether you're looking at some of the national oil companies in the Middle East and kind of where they're positioning around that, or a number of the Western energy majors, this is a big part of their growth story. And I also think it is part of their energy transition story. Natural gas has a much lower carbon footprint than the other fossil fuels. It's certainly the low carbon cousin of coal within the power sector. And so I think because of the energy transition out there and the pressure to reduce emissions, I think gas really fits in with that story. And so I just generally think that that's why you're seeing continued announcements and continued investment there. And just quickly on the LNG export piece from the US, I would say that most of our colleagues who've got a better tie-in to what's going on in DC see this as kind of more of a pause than a permanent change in U.S. position, even if there's not a change in power. A lot of the near-term projects already have necessary permits. So you're really looking out kind of 3-4 year plus timeline before you'd see anything affecting the LNG market in terms of a real physical impact. So assuming they get permitting resumed at some point, I think that the U.S. can continue to play a role there.
Yeah, that's just maybe a political pause, if you like, playing the climate angle, perhaps Biden for a few months ahead of the elections, while gasoline prices remain fairly steady. We had that survey, that's the result we had yesterday, that the only way is up for nat gas prices. Narendra, let's take the opportunity as we have you this morning and talk about the elections coming up for India, and in the view of economic planning, more of the same, assuming Mr. Modi will win, and he is the top contender right now. Where do you see economic changes happening at all from the current agenda? Anything that we need to know that to expect in terms of a new administration, new economic plan?
Well, I think if you go by the reports from the ground, I think there's a strong possibility of Prime Minister Modi returning to power for the third term. And in fact, if you look around in business or in oil and gas circles, it's kind of more or less already done and concluded things. So majority of players are looking at India kind of under Modi, 3.0. So that's the kind of mood in the country and sentiments. But as you know, the government has focused a lot on the energy sector, both on the traditional energy like oil and gas and even coal, and at the same time on renewable. So I think that trend will continue. Going to be massive investments in an expansion in areas like hydrogen, solar, offshore wind, and nuclear, and so on. But at the same time, it's not going to happen at the cost of oil and gas or coal. I think the focus on oil exploration, domestic oil and gas exploration will continue. And at the same time, Indian companies will keep looking at opportunities overseas to acquire E&P assets wherever possible. So that will continue. So because we still remain by and large a fossil fuel economy, it will change, but it's going to take maybe 4 decades or 5 decades, who knows. But we have got very clear agenda in terms of 2030, 2040, 2050. Milestones are already there. But you also see, for instance, we are today consuming, for the sake of discussion, 5.4 million barrels of oil every day, is only going to go up to 6 million barrels in coming years, and may go up to even 8 million barrels in coming a couple of decades or 25 years and so. So that's if we have to sustain growth rate at 8%, and we want to grow at 10%. So if you want to grow at 10% in order to eradicate poverty and make India the third largest economy in the world, which is a very kind of declared agenda, in that case, we need more oil, we need more gas, and whether we like it or not, we also need more coal. So, and plus, of course, the renewables and everything. So I think that will continue. In India, for instance, there is no kind of oil is a respected commodity, gas is a respected commodity, even coal is a respected commodity. So there is no demonization of oil in India or gas or coal for that matter, because people understand, even those who are heavily investing in renewable, they know that for an economy like India, where we still have large number of people, under energy poverty line, and at the same time, we are the fastest growing, large economy in the world. Whether we like it or not, but we need to invest more in oil, more in gas, more in LNG terminals, more in E&P assets, more even in modern generation coal mines. So that's the kind of view. But at the same time, India is very well aligned with the global sentiments that we need to do more in order to, in terms of, getting rid of, emissions. So that is also very much on the agenda. So traditional oil, gas, coal will continue to be priority area together with renewables and atomic. And at the same time, India wants to be at the forefront in terms of, dealing with crises like climate change and global warming, or call it by any name.
All of the above. India can afford to do that, I guess, as an economic engine. I mean, Rob, I'll just go back to you just to compare. I mean, 8%, 9% growth. We're not going to see many countries hitting that, are we? Including China anymore. But give us your quick take, and then I'll go to Bora on China also for his outlook on that. US economy, we've seen a very strong start to stock markets, boom, biddy boom. Not that is, but there is a reflection really of probably, what's happening with the disposable income more than anything else. But what's the trajectory now going forward in terms of Fed policy, interest rates not expecting to be cut till at least June? So again, has the sentiment changed the last 3 months for the 6 months going forward?
Well, I think that the U.S. economy continues to deliver. I think that you kind of have to keep in mind that when you look at the U.S. landscape, energy is a pretty small piece of the overall mix, right? I mean, I think energy comprises around 2% of U.S. GDP. So even though the U.S. is an energy behemoth and exporting more energy resources than it has in a very long time, I don't think it's a fixation of the political and economic elite because it's just not as big of a driver of the overall economy as it is in some other countries. So my sort of general view is that when you look at kind of Fed policy, they're not particularly concerned about what's going on in the oil patch per se, and they're much more kind of looking at where inflation levels are in this country and keeping those in check. And so, we'll see what happens down the road, but I think the sort of general economic growth story continues to be pretty strong here in the U.S., despite calls for recessions and this kind of thing for quite some time that just haven't seemed to materialize. Of course, a lot of that growth story is tech, right? So tech continues to deliver strong results for the U.S. economy.
Yeah. And I mean, tech, especially the stock market. There's our question for today, which addresses U.S. oil supply growth for this year. Forecast from IE Week, which is of course happening right now in London. Lots of stats being spewed out there. What's more likely, 500 barrels a day growth or closer to 1 million? And I know, Rob, when we had your comments earlier this year, you weren't too optimistic on, medium term US production growth. Bora, let's go to you on that. How would you vote on this one from what you're hearing in the market? And how is that going to impact, if at all, OPEC thinking in its forward planning for the next 3 to 6 months?
Look, I don't really have a strong view on that. If you're talking about U.S. Crude production capacity growth outlook, I would have voted on the downside, right? The 500 option, because there are other things to invest in the U.S. It's a very rich economy. There's this Inflation Reduction Act. Tech is booming. Why should I invest in getting more oil and gas out of the ground when the price outlook, at least in the medium term and from a regulatory perspective, it's not a favored sector? But I want to balance on a couple points, if I may. I was very impressed by Narendra's ambition that India should grow at such a robust rate and that it needs access to energy, right? Whereas in the US, the Biden line, at least, I was watching the BBC and Kathy Kay mentioned that Americans shouldn't be so down on Biden since the US has the highest growth rate amongst the advanced economies. And that sounds nice, but what is Germany growing at? What is the United Kingdom growing at? They're shrinking, and America's 2.5% growth rate, that's quite impressive. It's coming from the services and Inflation Reduction Act, etc. But you look at the U.S. deficit, it's 6% of GDP. So without that access to money printing and borrowing, what would be the growth rate? So I'm quite impressed that India is taking off, I would say, under much stronger fiscal foundations.
Okay, and Narendra, any concerns in India about inflation? I mean, with this growth, obviously, comes inflation usually. In terms of how that might filter down through the economy, or is the country feeling pretty steady on that front?
Well, by and large, I would say the country is feeling quite steady. But at the same time, we are a democracy, a liberal democracy, very closely kind of interlinked with economies like the US or, Western Japan, Australia, and other, such countries. So, for instance, look at IRA. I've heard many people complaining about IRA. But in India, when we look at our IRA, we see kind of, that is okay for us, because IRA means that America would kind of investing more also in manufacturing and would basically take away a part of the thing from China, and that would deliver. That would mean that countries like India, Vietnam, Thailand, Indonesia might benefit, and they also emerge as a kind of counterbalance in terms of manufacturing to China. Besides, of course, the US. So, which means that it has kind of potential to deliver geopolitical dividends for majority of economies, free economies in Asia. So, which I think is a plus plus. And at the same time, our worry is that China, at the same time, we don't want China to suffer. We want China to continue to grow, because that's in our benefit. Because a steady growing China is good news for us. What we don't want is that, a hostile China in terms of, its political ambitions, geopolitical ambition. That's bad, of course. And that's what basically worries not only India, but majority of countries in the Indo-Pacific region, including Japan, Australia, and even Indonesia, and of course Vietnam. In fact, most countries in Indo-Pacific region. So I think it's a bit of a mixed picture. So therefore, for India's focus is basically, we have declared already, it's a kind of that we want to be a developed economy by 2047. That does not mean that our per capita would grow to match with, let's say, Germany or the US, but by and large, the size of economy would be in the region of about 27 to $30 trillion. So that's the declared goal. And there are milestones being basically, talked about. So for that, since we are an energy deficit country, we need lots and lots of energy. Even if, for instance, look at our push in solar, we are doing very well. But then 80 to 90% equipment that we use for solar are still coming from China. And so therefore, we are setting up two massive kind of gigafactories in order to actually, over the 5 years, become a major exporter of, solar equipment, hydrogen equipment, so on and so forth. So kind of these are the kind of plans the country is working on. We are also attracting a lot of foreign investment. Foreign companies are coming into India, investing here. So I think, coming 4, 5 years, 7 years, Indian overall energy landscape, economic landscape is going to look pretty attractive. I mean, there are still some people around in the world who are a bit skeptical the moment you mention India. But I think wait for another 4, 5, 6 years, the kind of, policy push and policy infrastructure that has been already put in place, and the kind of investment that's coming in. And I think the landscape is going to be very, very attractive. As I said, India is energy deficit, and that's an issue the government of India is addressing. And that includes various state governments, since we are a federal structure, on priority basis. And that's going to be a big, big game changer.
Okay, thanks, Narendra. Rob, I mean, on that point of the IRA, how much are those plans being sort of talked about within the current campaign, the presidential campaign, which is well on its way, isn't it? I see that from one of our headlines, we have another possible government shutdown looming yet again, this vicious cycle of course, it won't happen. In terms of forward looking, the US economy is doing very well, but it doesn't seem to be, from what we read, giving Biden a lot of impetus or the Democrats, a lot of impetus in their polling or campaign. What would you say about that? And why is that being missed?
Well, so I think that it's very hard to get voters or the sort of general public in the US excited about energy policy. I do think that it's possible you'll see some rhetoric on the Republican side about a potential IRA repeal.
Yeah, but it's not just about energy. It's about manufacturing and everything, chips, etc., like Narendra just mentioned.
Oh, absolutely right. So the Inflation Reduction Act is not a good name. It's much more than that. It is pretty much an energy policy act. And then I think if you were to sort of think about the politics of a repeal, even if it is an election issue, I would be very surprised to go in and sort of split the hairs on undoing it. Similar to Obamacare, Republicans often lament that bill, but it still remains the law of the land. And I think, particularly on clean energy or some of the IRA provisions, I mean, look at where all the investments occurring. It's all over the U.S. It's not just happening in Democratic states, and so you'll certainly have Republican House lawmakers where you've got new EV production facilities or solar production facilities going into their districts, it'd be hard to vote against some of those things, especially now that the CapEx cycle is already underway.
Okay, thanks, Rob. There's the result of our survey for today, pretty close, 60-40, so maybe it'll be somewhere in the middle. Bora, we've run out of time, but just to go quickly to you, just on this point of sort of nearshoring and the investments being made by the US, presumably to lessen their reliance on manufacturers like China, India doing the same going forward. I mean, do you see this deglobalization trend that we're seeing kick into action too little, too late? Or is it going to be a solution to make sure that countries feel individually more secure on their supplies of their commodities and whatever else they might be investing in?
Yeah, I think we will continue to see globalization, but it will just look different. There's been, I would say, a diversification of the interdependence. It was a very strong America-China link, and we had seen books written about it called Chimerica, right? That would dominate the world economy. I remember that clearly. But now I think America is definitely looking at Mexico more carefully, Vietnam, India. The reason Taiwan is so strategic on the chip side, these countries, especially around China, are going to be benefiting definitely from America's policy, but and China takes advantage of it too because they have great trading links and collaboration links with their neighbors that they have certain frictions with, but very strong trade relations with at the same time. Even Taiwan is a major economic partner of China, and they need each other. So this sort of black and white, us versus them kind of outlook, yes, the defense and geostrategist commentators tend to portray things in that light. However, from an economic perspective, interdependence, I think, really continues. And what we've seen, in spite of sanctions and restrictions, is that it's like water flowing down the path of least resistance. People work around these obstacles to get the goods, services, and investment that they need. And especially a final comment from me on the energy transition. India and China working together on the solar technology because China has the solar technology. India wants it until they can replicate it at home. They'll buy it from China, and it would be harmful to India if they didn't. So India looks out for themselves by trading with China.
Okay, thanks, Bora. I saw actually you'll post it on tomorrow's news, and there was a very interesting FT article that came out online, which is that the US should be considering, forget about the SPR, making an SRR, which is Strategic Resources Reserves, and creating a market or a fund, let's say, for that, because that's what we should be really looking at in terms of reliance on things like nickel, cobalt, etc. Anyway, for another day, thanks so much, gentlemen, to Bora, Rob, and Narendra for joining us today, and have a great week ahead. Thanks, everyone.
Thank you.
Bye-bye.
Thanks, everyone.
Thank you.